everyone, welcome to the ichimokucharts.com daily analysis for the Aussie dollar US dollar FX for Monday, November the 28th, 2011. Well, the change of trend today and a green-bodied candle that's made a higher high and a higher low. Previous day's trading we had a candle that made a lower high and a lower low. We saw the market trending down with a series of lower highs and lower lows. So a change of trend to the upside, and a fairly important change of trend as well. If we look to the previous candle and the candle two prior to that, we can see that we had a strong potential for a change of trend to the upside. We had a tweezers bottom pattern, and tweezers bottoms, some people think that they have to be with consecutive candles. There can be one or two candles in between, and that's the case here. And it's basically where we have the lows of these candles adjacent to each other and pretty much within the same area, and that did set this market up for a change of trend to the upside, and that has been confirmed. So that bullish reversal pattern has been confirmed today with this fairly bullish candle in terms of the size of the body and the colour of the body. The colour of the body denotes that the buyers have made net bullish progress, and the size of it suggests that they've made a decent amount of bullish progress. Having said that, however, we do see this largish shadow on the top, and that does raise some concern about continuation of the trend to the upside, and that's because it denotes the buyers losing commitment as they tested up above the Tenkan Sen, this green line here. We know that the Tenkan Sen in a fast moving market will act as the initial area of support or resistance, and in this case resistance, and the market's failed to close up above this, so that is an important area for this market tomorrow. It's at 99.21.5, so there is some good solid resistance in this region. Now, just looking at this highlighted yellow area, we have had a window set up in this market, and candlestick terms, windows are the same as gaps. They're just a gap between the highs and the lows of two adjacent candles, not to be confused with the gap between the bodies, and some people think that the gap between the bodies of the candles is a window in candlestick terms. That's not correct. It's actually the same as the gap that we have in our Western style of analysis, but the interpretation of them is slightly different with candlesticks, and with candlesticks we tend to use them as areas of support and resistance, and in this case this window will offer itself as very strong support for this market. So we now have a nice floor below where this candle is currently trading, and that extends down to roughly about this 97.67 region, but down below there we do have fairly strong support anyway, down to 96.59, where we can see the market tested and we saw the rejection from that area. So that is a very important area of support anyway. To the upside, obviously we've seen the round number 1 exert its influence for today's trading, and that's why we see this large amount of rejection to the downside, this largest shadow on the top of this candle. So this will be a very strong area if this trend is going to continue to the upside in the first time frame. In terms of Ichimoku, we are still trading down below the cloud, so the market has an overall big picture negative bias. The market is still trading down below the Kijun Sen and the Tenkan Sen, so it's bearish in the medium term and fast term time frames, and the Chikou span, if we look here, is trading below the corresponding price action, so it's confirming the negativity that we're seeing overall in this market. So if this market does rally, we expect the parity to be a very important level, but also around the cloud here we have the bottom of the cloud coinciding with that region, and that will offer itself as very strong resistance. So a lot of resistance for this market to overcome if we are going to trade to higher levels. Just looking at the Kijun Sen, however, and that is pointing sideways, and that's reflecting lack of downside trending action in the market at the moment, and it tends to attract price action, and that's exactly what's happened today. So there is still a possibility that the market will attempt to trade to higher levels, but we certainly could see that the market reject it even if it does trade to those higher levels. So for the next day's trading, the area up around 1 is very important, 1.00. And certainly the area around the window that was opened is very important support for this market, and then down to 96.59, where we have this support that's been tested and we were rejected from over the last few days. Next, moving to the Euro US dollar, and here we see a change of trend. We have a candle that's made a higher high and a higher low, but we've done that on an indecisive spinning top type candle. So that doesn't make us feel confident about the potential for this trend to continue. The spinning top candle is a candle of indecision because we have these, firstly the small body, which means that the side that one only made a very small amount of net bullish or bearish progress, and in this case a very small amount of net bearish progress, but also the large shadow on the top and the bottom, and that represents downside price rejection, but then again upside price rejection. So the buyer's losing commitment, but the seller's losing commitment as well. So neither side has really taken control of this market, and that's why it's a very indecisive type candle. So not the type of candle that we'd like to see the market changing the trend in the first time frame. We'd like to see some bullishness. So it does suggest that the market doesn't have enough momentum from the bulls to continue the trend to the upside. If we do, however, see the trend continue, then we do have potentially strong resistance around this 134 level, and we can see the shadow on the top of this doji type candle prior 2 candles ago, and that is an area where the buyers are now consistently losing commitment. We can see here previously that it acted as support. We can see the shadows on the bottom of these candles, and now it's changed character and is acting as resistance, and previously here over the last week or so the area was acting as support. Now in Ichimoku charts terms, the market is trading below the cloud, and we had the bearish breakout a few weeks ago here at 135.42, and this trend to the downside is continuing in the second time frame with a series of lower peaks and lower troughs, and there is still strong potential for this trend to continue down. So that's negative in big picture terms. In the medium term and fast term timeframes, the market is bearish as well by trading down below the Kijun Sen and the Tenkan Sen. Looking at the Kijun Sen, that's pointing flat, so there is potential for the market to test to higher levels, but certainly the area around 134 and at the Tenkan Sen will offer themselves as resistance. The Tenkan Sen trading at 134.11. Now the Chiká span, if we look across here, that's confirming the negativity that we're seeing in the market by trading below the corresponding price action. So this does suggest that there is strong potential for a change of trend back to the downside for the market to test lower levels. 132, the low of this previous candle, is important support, and then we have support down around this swing low around 131.43. Because of this indecisive type candle, let's watch the low of the current candle, which is at 132.70 for a potential lower high and lower low.